Okay, it's 25th of October. I've been testing a new algorithm. It's really straightforward. I don't have much code in terms of risk management in this at the moment. It's just a standard lot size 0.5 that I'm using on every trade. And I've been doing this for 3 weeks now. I've just left it running, forward testing. So the algorithm is really straightforward. What it's doing is it's taking a trade on this buy signal. So I don't know if I have it open right now. Let me go into it. Mirror up. Give me a second. I think it's this one. Yeah. So the Renko indicator fires on the drawing of a fourth brick on the hour this is based. This is how the alert's been set up. So there's a few adjustments I've made to the indicator itself, but the crux of it is going back to one of these. So just click on this. As price is drawing, in the current hour, you see this little green block just by here. It goes up and down depending on what price is doing over here, until on the hour you get a signal. Okay, this creates an alert. So that alert goes through all of these. I've set up alert on TradingView. It then hooks into an SQS, so the message gets sent to an SQS queue in AWS. This is behind an API gateway. So I've set all that up, and I have on my local computer the code I've created hooks up to this trade event process, and what it's doing is it's capturing all those events. And this is code that I've had since about 2011. It then sends the message over to an EA which I've coded, which takes the trade. So it's as simple as that. In terms of money management, so the stop loss is 80 pips. So I've set it on the low of the fourth brick. So all that information gets sent with the alert. And an alert looks something like that. So you have the symbol, the time frame, the direction, and the price. So the price is the entry point. So it's a standard block size of 20 pips. So from the entry point to the stop loss, that's 80 pips. And the take profit is set to 20 pips. Sorry, not 20 pips, 40 pips. So 2 blocks. So in effect, what I'm doing is I want to risk, for every 1% I risk, I'm going to make 0.5. So instead of doing 2 to 1, 3 to 1, all that nonsense, I've gone the opposite way. I've made sure that the stop loss, the risk, the distance between the entry and when you get out, is higher than the average true range for the current currency pair. I've just set a standard of 80 pips, and the results of this. So I've been doing it over 5 pairs. So I'll just bring this down. So the expert advisor is currently sat on the pound dollar. I need to do it on one. And I've done it on pound dollar, euro kiwi, pound Aussie, and pound kiwi. I want to bring pound yen into this as well to give it a go, give it a test. But from when I started the process, at the top we've got all these here. This is when I was testing it, so I'll show you in a second what the results of this looks like. But the moment I switched it on, so I did it on an FTMO demo trial. It's still running at the moment, although I think the time period's over with. I'm still able to take trades. I'm not quite sure what's going on there. But in total, there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30 trades, and out of those only 5 were losses. And that's mainly because I've switched around from this, trying to reach 2 to 1, 3 to 1, and going for 0.5 to 1 instead. So that's risking 80 pips to make 40 pips. And that's had a huge impact on the take home. Obviously the losses are larger than the wins, but so long as the win rate is high, it should be positive. So the testing that I've done kind of looks like this. So you can see from this, the gross profit is nearly 3 grand. The gross loss is just under £1.5 grand. So my total takeout from this so far, and this is only 3 weeks running, is just over 1.5 grand. That's not with any proper kind of risk calculations. I've just set a standard lot size of 0.5 lots, so I haven't brought in the code to do all of that. But you can see the percentage of wins is 60% according to this, and losing trades is 40%. So that's a really good win rate. 60% win rate so far. And this is the result. So when you do get losses, they are bigger, but over the longer term, because my wins are much higher, this is what I'm seeing. Now this kind of flat line here is when I was doing all my testing, just getting it all set up, and I've just left it running. Just wanted to see what would happen, and this is over 5 pairs, so I'm not focused on one pair. And yeah, so standard risk management there, very basic, no proper risk calculation, just a lot size of 0.5, and this was the output so far after 3 weeks. Just going back to the chart. So the nice thing of this, what I've been doing is I'm basing it on the hour. If we use some of the ICT concepts, where I'm just focused on the breaker, okay, I've dropped down to 30 minutes, and if we focus on these 2 buy signals here, move this over a little bit, so you can see the arrows moving. Now here, when you get a move of 80 pips, okay, somewhere around here you're going to find a breaker. And if we move over to the 30-minute, so we can see one just by here, so we know that this is a valid breaker based on this low, high, lower, low. Stretch it out, you've got an expansion here, a pullback, and then you've got your propulsion block just by here, and off it goes. But waiting for the 80 pips to draw takes us all the way up to here. So this is where I actually got in on the trade, was all the way up here. Now the move, looks like the move has already happened. Now I'll be trying to get it down here, placing my stop down here ordinarily. That's fine when you get these bottoms, but when you hit one of these here, you get a lot of chop. By going for this, setting a huge stop all the way down here, it never comes back. It does drop down, but I'm already out of the market, and I've taken my my small profit, and I keep doing this over and over. So every time there's a signal, okay, so we had this small dip here, we've got a low, high, lower, low, stretch it out, you've got a break in structure. Now I don't get in until somewhere around here. Okay, there's a bit of a pullback, but my stop is not underneath these lows, it's all the way down here. Sorry, not there, here. So I didn't hit it, but it did reach the target. So that's effectively what this algo is doing. I switched it on its head. The main thing is it's not so much about the breaker or the order block, fair value gap anymore. It's more about the exit strategy, as opposed to trying to go for big 2-to-1s, 3-to-1s, things like that. I'm going for 0.5 to 1. I'm setting a huge stop, which is outside the average range for that currency pair in the day, and going for a smaller win, and that's having an impact on the win rate, and the win rate is important. As long as you get a higher win rate, the wins will cover all the losses, and this is reflected in this. It's going up.